It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm Paul Peebles, National Underwriter for Old Capital, and joining me today, Michael Becker.
Hey, Paul.
Michael, smartest guy in the room. So Michael, who owns over now 5,000 apartment units and has raised over $95 million in equity and has gone full circle with 10 plus deals. What is
10, almost 11. So yeah.
What does that mean?
You know, when we say go full cycle is when you kind of come in, you buy a property, you reposition it, and then you go harvest out your capital. So that can be, typically in one or two forms. One is you sell it and then you realize a capital gain or go into a 1031 exchange and defer it. Or two, you can just do a full refinance and either through supplemental financing if you have a Fannie Mae loan or just straight refinance it and then pull some cash out and return it to your investors. So that's kind of what we consider full cycle. So it's always a good day when you get to, return a large chunk of capital to a bunch of people. So that makes you feel good like Santa Claus,
Good for you.
Yeah.
Good for you.
Christmas coming up here pretty soon. So it was good.
That's great. So Michael, who's a former banker, knows a thing or two about loans. There was a question that came in I thought was a good question for Michael to answer. And Michael, what are the top loan pitfalls? The top loan pitfalls, and can you give me an example of one or two?
I'll give a few. How about that? So some of the things that trip people up when they're applying for a loan. If you've been in the business for a while and you went through the last recession, you might have a poor track record. So if you have bad credit, just bad personal credit in general, you just don't take care of your business, or if you happen to have been doing this for a long time and you gave a property back to a bank or you potentially filed bankruptcy or something like that in the last cycle, those are things that come up that could potentially jump up. So if that's the case, make sure you certainly talk about that on the front end. I remember Paul and I got 2 banker boxes full of paper when I was still working at Wells Fargo on a loan we were doing. And then, I look at the personal financial statement and Tiny, he checked that he had a foreclosure and, never came up on the phone, but he typed a little check and then had to give the 2 banker boxes full of paper back to Paul. So he'd go take that loan somewhere else.
Yeah, not only did he have a foreclosure, but he also had an indictment and conviction.
That's what it was. Felony.
Banker fraud.
Yeah, that's right. I forgot it was a felony. That's what he checked. It was a little tiny check mark that never came up. So
can't help with fraud, felony. That doesn't work.
Yeah. So those are things that if you have any sort of checkered past, needs to come up early in the conversation, because if we know about it, we can deal with it. If we don't know about it, that's it. So, kind of number 2 would be just kind of delayed disclosure. So if you don't disclose that, you don't tell your banker about that, those are things that they find out on their own. There's no real chance of overcoming that. They're just going to blacklist you and you're going to be declined and you have to move on. So make sure you disclose anything like that. The next thing, a lot of the people that we do business with are, relatively new into the industry. So they weren't doing deals in the last cycle. So, kind of unsophisticated buyers. That's another thing that can come in and cause some problems. Lenders are really wary if it's your first transaction that you don't have experience getting through that. That's where, we've always talked about, team sport. So this is where, I think an experienced commercial mortgage broker like us, we can come in and craft a story, help you build your team out to overcome that objection that your lender is going to naturally have as your first deal, because everyone starts with their first deal and you just got to overcome it. So it's really team and building the right package and crafting the story for the lender. That's what I think we do better than most, is crafting that story and helping get your first deal done. The next thing really kind of that come in and get some people, just kind of lack of equity. So if you're going in, your eyes are bigger than your stomach, kind of use that analogy, and you go in and try to bite off a deal that you need to go raise $3 or $4 million and you don't have a well-established investor pool, you don't have your money, or, if you don't have enough money to put skin in the game and you got 2 nickels to rub together, but you don't have much more than that, and you're going to just try to raise all the capital, not putting equity in the deal, that's usually not a good combination for most lenders, or really your equity. So if you don't have any money to put in this deal, that's challenging to overcome. So make sure that you have some money you can put in these deals, as well as you have enough equity kind of sitting on the sidelines to come in and do it. Another thing is you kind of have lack of control. One of the things that frustrates frustrates us as commercial mortgage brokers, or certainly frustrates banks, is if you get a deal coming in and then you shop it all over town and everyone in the world sees the same deal. Typically, when I was a banker, if I'd have, a broker bring me a deal and then he was like shopping me and 8 other banks, he could do that to me once. And when I find out he's not going to do that to me again, and then I would stop taking his packages. And I was one of the most prolific apartment lenders when I was at Wells Fargo. We led the nation for my business unit for 3 years in a row. So I had a couple of brokers do that to me, and then, I chopped their heads off and stopped working with them. So they lost, one of the best outs in the marketplace at that time. So, that's the same with you as a buyer. If you're going to go around town shopping to everybody, it's usually about getting with the right team member and they can deliver the right execution. So making sure you have control of the deal and making sure that you don't shop it too hard. Another thing, really kind of back to some of the less experienced borrowers that we have, if you have unrealistic underwriting assumptions, if you don't do your homework, if you kind of have overly aggressive assumptions on rental rate growth that aren't supported by market data, if you have unrealistic operating expenses, or you leave out some major categories in your budget,
like property taxes.
If you're not adjusting those up with the purchase price, which is pretty customary, those are things that your banker's going to sniff out pretty early on, and then that'll cause you some problems along the way. And then finally, one of the things that we always talk about is having capital put aside upfront to take care of physical issues. So if you don't have sufficient contingencies for, any sort of scheduled or unscheduled capital events on the property, those are things that, can cause you problems. So make sure you do a good inspection, know what it's going to take to get your property to a physical condition that'll be supportive of you coming in and raising your rents 10 or 15%. Those are things that you need to make sure you take care of on the front end.
So what's interesting is that we talked about loan pitfalls, but also too, seller kind of wants to know about how you look at this transaction too. So whenever Mike or one of our borrowers takes a look at a transaction, that they make an offer, that LOI has got them into the next round, so the best and final, and then all of a sudden they're on the call with the seller to kind of have the seller listen to what the game plan is of the buyer, because the seller, is making a decision. They have to pick the right buyer. Who is the highest qualified person to buy my property? And have they done all their homework and gone through it, making sure they figure out what the property taxes are? Have they talked with the management company? So the seller almost becomes the underwriter like for the bank.
Yeah, they're going to want to know kind of what are your tax assumptions typically, what are your rental rate assumptions, what type of debt you're going to put on it. What's your capital budget? Do you understand that if the property needs a new roof, are you accounting for that? Or, is this going to be a surprise to you down the road? Because they don't want to tie it up with you and have you say, oh, I didn't know about whatever physical issue on the property, and then come in and try to retrade them and then blow the deal up. So those are things the seller, like Paul said, he really comes in and interviews you typically pretty hard and make sure that you understand what you're getting into and you have a plan to overcome it and close on the deal.
Yeah, maybe some of the smaller sellers don't do that, but a lot of the sellers, brokers, want to kind of be protected, so they kind of put the onus back to the seller to pick the right horse to buy the property. So they put these series of questions out there, and it may be 20, 25 questions, and you got to prove up your underwriting piece as the buyer. And so you got to also probably provide them a term sheet from a lender that's actually reviewed the property. So don't forget, not only do you have to apply for a loan, but you also have to apply to the seller to get his approval to buy his property.
That's right. Yeah, that's a very critical part of the process. It's not always just price. I can guarantee you any broker worth their salt, if you close on price and you're the weak buyer, he's going to just take your number and go to the guy who wants to buy it and say, hey, pay this price. And then all of a sudden you lose the deal. So, I always say it's an unfair business. So being organized, filling out the questionnaire, being on the call, being competent on the call, being confident in your answers, those are things that will help kind of differentiate yourself from the other buyers that are looking to buy the property.
And kind of if you work with us or you work with an experienced, seasoned mortgage banker or broker, they're going to be on that call with the seller just to have the seller hear our position on the deal, how confident we are to closing the deal. You can get one side from the buyer, but they really want to hear from the banker in the deal. So you want to have a qualified team member that's kind of explaining your story and has been to the property, seen the property, and that it works.
Increased certainty of execution. That's very critical to winning these deals. That's what the sellers want.
Especially the amount of money that's at risk these days. It's unbelievable.
That's right.
So, if someone wanted to get to know you, Mike, what's the kind of the best way for them to kind of understand what you do and build a relationship?
Yeah, really the easiest way is just go to our company website, which is www.spiadvisor.com. It's SPI like spy advisor.com. On there's a contact page. You can kind of fill it out, and it's a good way to kind of reach out and maybe have a call set up with me and kind of get to know each other a little bit that way.
Fantastic. What's going on in the Old Capital world?
Certainly, we always encourage everyone to go to oldcapitalpodcast.com. That's oldcapitalpodcast.com. You can find the multifamily financing 101, kind of our white paper on the basics of how we put these transactions together from a financing side. And also the sample due diligence checklist there as well, kind of what I attach and the information that we look to get. We're putting LOI out to the buyers. These is kind of the information that is pretty comprehensive that we try to get. And then also we don't have an actual date coming up, but if you go to the oldcapitalpodcast.com there, you can sign up for our weekly newsletter that we kind of put out, kind of some tombstones on the recent transactions that we've done. And we'll have the next Old Capital speaker series will be sometime in November, December. That'll be in the Grapevine Convention Center. So we'll get a date out here pretty soon on that. We'll have a guest speaker come in and talk about what's going on in the marketplace.
And don't forget, if you do like our podcast, and we appreciate you listening too, is go back to iTunes and if you can give us a 5-star rating, we would appreciate that. If you think
refer a friend too. That's a good thing. It's maybe word of mouth. That's a good way for us to grow our listenership as well.
I agree. So I'm Paul Peebles. That was Michael Becker, smartest guy in the room. Have a great day.